All right, so I guess we can start. Um, Good afternoon, everyone. And this is our first meeting of Mezo Investment Club. So my name is Ryan Wang. I'm a rising junior at Green Hills. That's a school in Ann Arbor, Michigan. And I think like most other schools, Green Hills doesn't offer much exposure to economics and finance. And I personally believe that that is something that needs to change. So learning about these subjects is a huge investment into your future. So I think that understanding the importance of being responsible with your money will help you achieve financial independence down the line. So that kind of sums up our goal as an organization. Mezo is student run, and we hope to spread the knowledge of fiscal responsibility, money management, and financial literacy. Now, those are a lot of big words, but I think that I will promise you that by the end of this program, you will not only understand what they mean, but you'll also recognize their significance for the future. So that's a little bit about myself and the organization. Actually, happy Juneteenth, everyone. And I think that Robert actually has some words to say about that.
Yes, so before we begin the official introductions for all of our panelists here today, we just want to reiterate as an organization that we are committed, Mezo is committed to recognizing the racial injustices that have plagued this country since its founding. Today, as many of you know, and as Ryan just said, is Juneteenth, and it marks the anniversary of the liberation of African American slaves who built this country from the bottom up. Today, we understand the systemic racial disparity against people of color and financial literacy in this country, which is why our mission is to expand our seminars to areas underserved as a result of centuries of systemic racism. And beginning here today, we are on the front lines of finally balancing the scales. Back to Ryan.
Yeah, so I think that all my colleagues can now introduce themselves a bit, and then we'll go from there.
Thank you, Ryan. My name is Richard. I am a junior at the University of Michigan studying business. I currently work in venture capital, investing in startups. And something fun about me is that I love to play basketball. I used to play basketball at Green Hills, and so I've been keeping myself busy on this. So glad to meet everybody.
Hello, everyone. My name is Hirsch. I'm also a junior studying business at the University of Michigan. And when Ryan came to me with this idea for Mezo, I was really excited that you guys are all interested in learning more about the financial world. And that's why we're here to help out. I have experience working in consulting, working with businesses that are either in the funding stages throughout the process, as well as in the world of private equity, which we may get into later on, which is private investing. Yeah, so excited to share some of this insight with you guys.
Hello, my name's Edwin. I'm a rising senior at Green Hills School. And a fun fact about me is that in my free time, I make music.
Hi, I'm Rukmini. I'm a rising junior at Green Hills, and I've been spending my quarantine outside.
My name is Nico, and I'm a rising junior at Green Hills, and I like to play soccer in my free time.
Hi, I'm Alex. I'm a rising junior at Skyline, and I've been building stuff in my free time during.
Hi, I'm Noah. I'm a rising junior at Community High School, and over quarantine, I've been reading and running a lot.
Hi, my name is Robert Yang. I'm a rising junior at Pioneer High School, and I like to swim.
All right. So, now that you know a bit about ourselves and the organization, I want to dive into what Mezo Investment Club will actually be teaching. So the program focuses on investing in financial markets and asset management. So if you've ever wondered what the stock market is and how you can possibly make money off of it, I think this is the perfect place to start. So we've designed 4 units for this program, each lasting about 3 weeks. However, this is all very new for us. So depending on the reception and the feedback we hear from you, we'll figure out what we should focus on and when we should end. So we want this to be as flexible as possible. So Unit 1, stock market strategy, starts today. So these are the topics we'll look into for the next 3 weeks. And we'll also be opening up a stock market game for all of you to try your hand at investing in the stock market game with virtual money. So the goal for you is to apply the knowledge that you've learned from the meetings into the stock market game. And then I think I can talk more about that later. So without further ado, let's start today's lesson.
Great. Thank you, Ryan. So to start out, what are stocks? Stocks are pieces of companies that if you have one, you'd be considered an owner or a shareholder. So you would hold voting rights and a share of the profits. An interesting point to consider is that certain major shareholders have much more significant power due to the share of the company they own. However, if you can still own a small part of a company and you buy a single share, you would still be considered a part owner. Next, we transition on to Dell, an example with Dell, which Hirsch will introduce.
Thank you, Richard. So taking the concept of stocks into something that you guys may be familiar with, a company called Dell Computers, it's computers that you guys may have seen day to day, I'll walk you through a story of what the history of its investing was. So starting out, Michael Dell founded Dell Computers to manufacture business and consumer computers to sell to individuals. And he had to raise money. So after having private investors, he decided to take it public. Means, like Richard said, go on the public market and sell shares to all of you guys. And then an interesting thing he did, but about a decade ago, was take the company private again, which means he bought back all the shares on the open market from all the shareholders and again became the owner of Dell Computers. And then about a year and a half ago, he again went and made it public again. So now today you can buy Dell Technologies on the open exchange. So this is a great example of how companies use stocks or public IPOs as a way of funding themselves. And many of them choose once they go public to stay on the open market. Apple, Google, most of these are household names that you guys may be familiar with. But some companies like Dell followed a unique path where they were both private at two different instances and public at two different instances. So this just shows you how companies can use stocks as another way to get funding from a larger share of owners, all of you.
So now that we've learned a bit about what stocks and equity are, the question is, why do companies issue or give out stock in the first place? Let's say I own and operate a restaurant in Ann Arbor. Usually, a small city restaurant like mine is private, meaning they do not issue stock. However, we recently created a killer new menu that is bringing in a ton of new customers and revenue. So, with my newfound profits, I've been looking into opportunities to open up a new branch of the restaurant in the city. However, opening up a new location requires capital. But what is capital? Capital is the assets that are key to running a business. They include the manufactured goods that can be used in the production process. In my case, it would be kitchen appliances, tables, chairs, booths for the customers, the restaurant building itself, etc. Capital also refers to labor, which in my case comes from the chefs, waiters, and managers. There are many ways for me to raise the capital needed to create my second branch. One way is by borrowing money, typically through a bank. I would apply for a loan to receive the money needed to buy capital, and then I would have to slowly pay it back with interest over time. However, the restaurant industry is difficult, and there is risk of me not being able to pay back the loan. Defaulting on the loan has terrible consequences for my business, but we can get into that in more depth if we ever get to talking about the banking industry. So instead, I can decide to raise capital by giving out or issuing stocks. By selling tiny pieces of my business, I get the money in return to raise capital for my second location. By doing this, my restaurant company goes from private to public. This happens through an initial public offering or IPO. Once my company goes public, I become a publicly traded and owned entity. One way that this is a better method than taking out a loan is that there is nothing for us to pay back. We have no liabilities. However, going public will also have potential downsides. First off, the ownership of the company will be diversified. Restrictions will be imposed on management, and the company will be opened up to regulatory constraints by the government. This is also something we can talk about later in depth. By holding an initial public offering, I issued enough stock to raise capital for my second restaurant location. Like many other companies who go public, my restaurant business was able to undergo expansion, increasing company value.
So why do people invest at all? So the first reason that people invest is to gain financial independence. Financial independence is the point in your life when you can pay for your living expenses without being employed. And this usually refers to somebody who's in the retirement phase. So over the course of your working life, you can invest and then take that money out when you're ready to retire. So one common retirement plan is a 401k. So 401ks are employer-sponsored retirement accounts that allow employees to invest in their own retirement. This works by putting some of your paycheck into the company and then taking back your investment when it's time to retire. Another thing about 401ks is that they're tax advantaged, which means that the tax on your profits are delayed and sometimes lowered. This is good for you because less taxes mean you get to keep more of your profits, so you have more money. So the second reason that people invest is that there's a low barrier to entry. Getting into investing is super simple, and you can start by opening a brokerage account when you turn 18. It's very easy to get into and at an early age, so you can start investing in your future. Additionally, because of the volatile and unpredictable nature of the market, nobody can really make the right investment moves or trades 100% of the time. Seasoned veteran trainers who make a living out of trading. So this means that anyone can do just as well as the Wall Street analysts in New York. Hopefully, the knowledge that you gain from this program in the stock market game will pave the way for you to do so. Lastly, when investing in stock, there are usually good rates of return. This means that you can make a lot of profit off of your investment in the market. If you look at the history of the stock market, the overall trend is positive. This means that if you invest your money for a long period of time, you have a good chance of making a profit off of that money. Investing also helps decrease the negative effects of inflation. Inflation is a decrease of value in money. This means that in 10 years, the money sitting in your wallet will be worth less than it is now. To put it simply, $1 today is worth more than $1 tomorrow. If you invest that money now, you have a better chance of beating inflation and getting more in return later on. Looking at the statistics here, there is an average 10% ROI, or return on investment, in the stock market historically. Of course, the volatility of the market rarely makes the yearly return on investment fall near the average, but the stock market has a positive growth in approximately 70% of the years. So you should usually expect some good returns if you simply hold your positions. So those are the reasons why investing in the stock market is a sensible option. The ability to achieve financial independence as you get older, having low barriers to entry open not only to the wealthy and elite, and obtaining decent rates of return that will counteract inflation.
Thank you, Rini. So the green and red lines that you see fluctuating in front of you is the price per share of a stock. Now, what is the price per share? Simply, it's how much money it takes to buy one share or one stock of a company. And ultimately, it's a reflection of what investors believe a company is worth. This belief is founded upon two main aspects, information and prediction. Oftentimes, they're very intertwined. Information is a compilation of what people know about the company's past and present. This comes in many sources. For example, publicly traded companies release earnings reports for each quarter of the year. These reports give investors detailed info about how the company has been doing. It highlights the company's profits, expenses, and liabilities, just to name a few. By looking at how the company has been doing through these reports, investors receive information that will inform their valuation of the company. On the other hand, prediction is what people think the company will do in the future. While investors can make wild guesses about what a certain company or industry will do, they often base their predictions off of information at hand. For example, just recently, the United States and China both banned their respective airlines from flying to each other's countries. Knowing this information, investors can predict what will happen to the stock prices of American airline companies such as Delta or United. Now, before I talk about what happened once this information got out, I want you guys to make a prediction on how the stock price reacted to this news. Think about it this way. By banning the routes to China, American airlines suddenly lose their entire market share there. Their profits and consequently the company's value go down. Investors see this and they make the correct prediction that the airline stock price will drop similarly. Let's look into this more. To better understand how information and prediction can affect stock prices of companies, we can instead apply these concepts to sports. Let's say that I own a professional NBA basketball team, the Toronto Raptors, for example, and last year we won the NBA championship. This year, we signed a superstar point guard, adding even more talent to our roster. Fans who follow our team can use this past information, our successful season last year, to decide how they think our team will perform next year. This is the same process that investors go through when they're looking to buy stocks. They look at how the company did in the past, what changes they have made, and how they predict the company will do in the future. This gives the investor a good understanding of the worth of the stock. Going back to our basketball analogy, if a talented player gets hurt or we trade players away, the chance of my team winning will change. Similarly, when there are new developments in the company or the stock market, my stock value will change along with it.
All right, so thank you, Noah. So that kind of wraps up our little content lesson section for today. I know it was, a bit shorter than expected, but I think that what we have right now is good. We don't want to throw too much at you guys so you guys don't get overwhelmed. But usually every week, what we're gonna have is a guest speaker come in, and usually the speaker would, have some industry experience or expertise in the world of economics, finance, and business. So this week we actually have Richard. So I guess he can introduce himself again and talk about his experience in business school.
Yeah. Well, thank you so much, Ryan. I do understand that a lot of you are incoming high school students or currently high school students, so you guys are thinking about college. And so as a current business school student, I would love to sort of take in any questions that you guys currently have. Feel free to just directly message me. Nobody will see these questions, and no question is a bad question. And so to start out, I can give a little bit of background of sort of what is business school and what you can expect from there. So largely business school is a place where you learn basics of business. So everything from financing, money, strategy, operations, or even management, you can learn that at business school. So for me, since I have a passion for investing, I found that business school was giving me a solid foundation on how to find great companies. So think of great companies such as like Coca-Cola, or even like companies like Starbucks. I mean, how often do you go to Starbucks, right? And so these are all companies that are really cash heavy and they're growing. And so these are really good companies to look at. And so business school, there sort of, if you're interested in different subjects, there's everything there for you to help cultivate that. And I'm getting in more questions. So I recently got a question here. What factors resulted in your decision for business school? So I actually started as a dual degree student studying engineering and business at U of M. I think there were about 30 of us total, but I sort of quickly found out I kind of sucked at computer science and I lacked the qualities of a good engineer. And so I wasn't doing quite too well, but I did do well in my business classes. And so I stuck with it. And business school is not demanding. And so it really helped that business school gave me a lot of free time to study on my own, to learn on my own and read books on financial history, smart people, and annual reports. And so, yeah, that's why I sort of chose business school. We have one from Miles. So in business school, does your class invest real money into stocks? So unfortunately, your professors will not actually allow you to, they're not going to encourage you to invest real money in your classes, but there are clubs where you can join other passionate students. I think at Michigan, there are about 7 to 8 investment clubs where they do manage real money and invest in real stocks. And these clubs sort of compete with one another to compete for talent and see who can get the best returns. And so it's a really, there are always opportunities to invest real money. So good question, Miles. Nice. And here's another question. What areas can you focus on at business school? I think I can keep this one brief. You can study accounting, finance, economics, strategy, operations. Some lesser known ones would be venture capital and private equity. And Hirsch, he also goes to University of Michigan, so he helped me out with sort of figuring out sort of what your focuses are. But we also have marketing, management, human resources, and business law. And so luckily at University of Michigan, because it's such a huge school, sort of whatever you want to study, you can actually just go for it. There are experts in that field wherever you want to go.
Richard, I actually have a question for you. So you've listed like so many options that you can go into for business school. Like, how do you pick if you don't know? Like, if you're just saying like, well, I think I'm interested in business. So then you head in, like, how do you decide?
Yeah, no, that's actually a really good question, because definitely I can say, I'll be very honest, when I started out, I didn't really know what I wanted to do. I knew I wanted to do business, but I didn't know I wanted to do investing. And so really when I started reading a lot and figuring out, I first read Michael Lewis's book on Flash Boys, which eventually led me to some other books regarding investing, and led me to Warren Buffett and Charlie Munger. Charlie Munger, who is actually alumni of University of Michigan, quick plug for Berkshire Hathaway. But in terms of what to pick for a focus, I would just say focusing on something that you're good at, or starting early and talk to people, join seminars like this to find out what your passions are. One really good advice that I got from mentors of mine was that pick something you are good at and stick with it. So in Ryan's case, I think why I was sort of attracted to doing this program was because he loved economics, he was good at it, and now he's continuing to do it, and that builds up over time. So I'm not sure about you guys, or for me at least, when I'm good at something and I do well in it, it feels pretty good. And so I think especially when it comes to picking a college or picking a major, do something you're good at and stick with it, and you guys will do great.
I think I have one final question here. Unless you already answered this, what clubs or activities helped you put you on the business route in business school? So like in high school.
Yeah. Clubs, I would say investment clubs. That's for me, at least. Unfortunately, I don't do them anymore because I have too much on my plate. But when I started out, it was awesome to surround myself in a community that sort of enjoyed the same things that I enjoyed. And it doesn't even have to be investing. Like if you love economics, or if you love helping other people through like social responsibility or sustainability, if you love helping schools teaching finance or economics, there are clubs and programs at University of Michigan that sort of cultivate that. And for me, luckily, there were a couple investment clubs, so I joined one, and I made some really good friends there, and they helped me choose my focus. Great.
All right, so I think that kind of wraps it up. Thank you, Richard.
Yeah.
I guess what we can do now is actually a Kahoot. So the content here is going to be based around kind of what we just talked about, what Richard kind of talked about, and then the answers are going to be increasing in difficulty. So can you guys raise your hand if you see this and can join? All right, nice. I'll also add the code down here. Raise your hand if you can hear the sound. All right, good. All right, we can just wait maybe a few more seconds and we can start here. All right, let's start. You can still join in halfway through. The first question: what is a stock? Most of you got it here. See who's first. Ava's first. Nice. All right, let's keep going. I'm really glad that everyone got this one. I think that one was fairly straightforward. So Ava's holding on to her lead, and Bob and Anna Banana are coming up. So we'll see how that changes next time. So which of the following is not an example of capital? I think it's good that a lot of people got that one, but just to be clear, liabilities are like the stuff that you would owe to someone else. So when you borrow from a bank, you have to pay them back. You have to pay back the original payment, and you also have to pay back the interest. So basically, you are liable to the bank to pay back the loan. So that's why this is false. Your next question: what is the historical return on investment of the stock market? All right, nice. Most of you guys got it there. So yeah, 10% is the average, but it's really spread out. The stock market is, actually pretty risky, and we'll actually talk about risk and reward next week. So very volatile. So usually it's not around that 10%. Oftentimes it's much higher or much lower, but 10 is the average. So which two factors dictate stock market change? Very nice. Once again, most of you guys got it there. Yeah, information and prediction. And we'll definitely go into a bit more of the technical aspect of why stock prices change, and then you get into this whole idea of are prices rational, irrational, the efficient market hypothesis. But I think that that's something we can definitely talk about down the line if you're interested. So once again, Ava holding the lead with Ronnie and Hai right behind her. So since the beginning of the COVID-19 pandemic, how have airline stock prices been doing? Yeah, I think this one's fairly straightforward. So, this is just kind of part of, predicting what's going to happen based on information. So a huge split here. Yeah, CARES Act is the one that the government recently passed, that Congress recently passed. Actually, a lot of you guys picked Obamacare. I think that was passed a while back to provide, affordable healthcare insurance to people. So yeah. Oh, we have a new champion, Miles. Welcome, Miles. Yeah, so most of you guys got it here. If you're interested, all of these names are actually basically the top business schools in the country. So Ross is obviously, the business school for University of Michigan, and then Booth is the one for U Chicago, Stern is the one for NYU, and Wharton is the one for UPenn. So. Yeah, that was a tricky one. So moving forward, a lot of these are going to be less about what we just covered, but also just like general business, econ, finance trivia. Yeah, so Tim Cook, CEO of Apple, Jeff Bezos is Amazon, Elon Musk is SpaceX, and Sundar is actually the CEO of Alphabet, which is basically they run Google. All right, so a lot of you guys got it, and a lot of you guys picked yen. So yen is actually, well, tell me in the chat what the currency of yen is actually from. Yes, well, okay, well, yeah, Robert. Yes, Sahana got it. It's Japan. What do you guys think the currency of the won is from? Yep, South Korea. And also, I think who got it first? Jessica did. Robert. And what about the rupee? Yep, I think a lot of you guys know that one. All right, moving ahead. I think this is the last one. All right, a lot of you guys got it. I think it's really good that nobody picked Donald Trump. I definitely wouldn't want him running the Federal Reserve, that's for sure. But Steve Mnuchin is the current U.S. Treasury Secretary, and Ben Bernanke was actually the Federal Reserve Chairman a while back. So now this is the last question. So I think Hai is still holding on to his or her lead. All right, nice. Yeah, most of you guys got it. I'm actually kind of surprised because, I don't think a lot of people would actually know about the Great Recession, but, it was during a time when we were quite young, so. All right, nice job. Hi, do you want to identify yourself in the chat there? Because we have no idea who you are. All right, I guess Hai they wish to stay anonymous. Oh, it's Eric. Well, nice job, Eric. We don't really have a prize for you, but nice job nonetheless. So let's get back to this. All right, so I know a lot of you guys have been asking about our stock market game. So yeah, so now I'll talk about it. So alongside our weekly meetings, we're also holding an online stock market game. So this is entirely optional, but I strongly recommend it as a way to put the knowledge that you learn from our meetings to the test. So at the end of each lesson, we'll delve into the game mechanics of investing in the stock market, as well as the updated rankings for that week. So one idea that we kind of threw around was that if people on the top of the leaderboard wanted to join as a panelist next week and talk about their strategies, tactics, overall investing mindset, then we'll be happy to do so. So our online stock market game will be held on MarketWatch. So MarketWatch is a website that provides financial information, business news, analysis, and stock market data. And they also allow you to hold the stock market games with virtual money. So I believe that through, I think that I sent out the stock market game information to all of you through my email detailing the program. So in case you missed it, here's the link to the game and also the password. Before you enter the game though, you have to first create a MarketWatch account. So I guess once you do that, basically you join here. I'm currently already in the game, but if you just go to this link here, let's see, I'll leave the game just to show how to join. So once you create your MarketWatch account, go to this link right here. That should be in the emails that I sent you. And then you do join game, and then you type in the password, Mezo Investment Club. You join, and then you're in. So yeah, that's pretty straightforward. And then now I'll talk about kind of the basics of the game. So the general goal of the game is to make as much money as possible. So pretty obvious there. You start with $100,000 and you're able to take this money and invest it in the stock market. So the big question is, how do you invest? Well, there are two positions that you can hold when investing, long position or short position. I think that most of you already may be familiar with the long position, but you just might not know it by name. So we'll go more in depth about the short position next week. So investors enter into a long position on a certain stock when they believe that the stock price will appreciate, which means go up in the future. So this is where the adage buy low, sell high kind of comes in. You buy the stock at the price you buy the stock at the market price, and hopefully if you predicted correctly, the price of your stock appreciates after you bought it. So as you can see here, the price of Amazon, the stock price of Amazon went up after this person bought it. So I think they're pretty happy right now. So the difference between the larger new price and the price that you originally bought the stock at is your unrealized gain. And it's unrealized because the potential profit you've made with this investment only exists on paper. So how do you actually realize these gains? How do you actually make the money, real? So by selling your shares at the higher price, and this is called closing your position. So the profit you've made now is your realized gain. It actually exists. So let's say if I buy here, then, as the price appreciates, I'm getting happier and happier. And then at around here, I realized that, maybe I actually want to see the money that I've gotten from my investment. So I sell here, and that's my realized gain. So now I can kind of show you how to buy and sell in the stock market game. So I have this test run server here. Let's say if I want to buy a piece of, I guess we can go along with Amazon stock. Basically, you type in Amazon or whatever the ticker name is, and then you press trade. I guess it makes you wait a while. And then basically here you have all the information. Type in how many shares you want. Maybe right now I just want 10. And then it gives you kind of the basic information of the price per share, the shares you're going to buy, and the commission. We'll cover the commission a little bit later. But yeah, basically you select buy, and then you submit the order. And the order usually carries out really quickly when it's when the markets are open. So regular U.S. trading hours are between 9:30 a.m. to 4 p.m. Eastern Standard Time. So that's when you're able to trade regularly. If you submit an order, like if you want to buy or sell, and then you submit that order in some time afterwards. So if you say like you submit it really early in the morning or really late at night, then it's not going to go through until the following day. So that's just something to keep in mind of if you want to go after after hours trading. So that was just a little bit about, that was kind of like a tutorial of how to buy. I can also sell Amazon shares. I think that I can sell Amazon as well because I already own some. So let's say if I want to close my position, then basically I say, well, I want to sell maybe 10 shares. Then I click sell, and then I submit my order. So that's basically it. So I think that, yeah, we held a stock market game a while back, and I think from personal experience, we also encourage people to team up with their friends. So this way you can talk through your investment choices with them, backing up your argument to buy or sell specific assets with evidence and reasoning. I think that this might allow your team to make sounder investment choices. So instead you can compete with or rather than teaming up, you can actually compete with your friends. And maybe if you're more competitive, this competitive atmosphere will drive you to think smarter, make better choices as well. So I think that concludes all of our content this week. Looking at if there's any questions. The game will not let me join. It says that the game will. Yeah, so the game is starting on Monday next week. So basically when the markets open at 9:30 a.m. on Monday, that's when you're going to be able to trade. So I hope that answers your question. Because the market's about to close. Well, the market's already closed. It's past 4. So yeah, that concludes all of our content for this week. So this was week 1 out of 3 for Unit 1, stock market strategy. And next week we'll go into basic investing strategies. And until then, try your hand at the stock market game. See how you can apply what you've learned today into your strategy. I'm looking forward to how all of you guys do. So if we didn't have any technical issues, which I don't think we did, we'll upload the full recording of this meeting on our YouTube channel. That way you can refer to it if you want to recall any information down the line. And we'll also be looking to make supplementary videos, sometime in the future there that will go more in depth about some of the stuff that we might have brushed over here, because this is just like kind of the basic overview of investing in general. We might want to focus on specific aspects later in our videos. So yeah, take a look if you're interested. And in addition, we have an Instagram, so we'll be posting for further program updates and information there. And after Mezo Investment Club is over, we might also want to post other programs or events the organization will be holding. So that's all there for you if you're interested. And feel free to email us if you have any questions, whether it's about the actual content or something else. And we'll also be sending out a feedback form after this that we hope you fill out so that we know how you guys are feeling about the program and how we can better adjust and accommodate. So that being said, that's all we have for you today. And just a reminder that, like I said earlier, trading for the stock market game starts on Monday next week at 9:30 a.m. and goes until 4 p.m. So that's when the game starts. So see you guys next week at around the same time, and take care.